Welcome back. Brian Bloom returns as our biotechnology investment expert. Brian, so what can you tell us about the companies?
Well, the first thing that struck me is all of these companies have different business models. And it's interesting, they're all trying to commercialize and bring to market extraordinary science that happened inside universities or in their companies, and they're all doing clinical and regulatory and commercial development of those products. But they're three completely different business models of companies. Cameron's company, Bioniche, has a very safe, there's a lot of downside protection to his company because he has a very profitable animal health business, but yet a lot of blue sky with respect to his bladder cancer drug.
So you're saying it would be a safer bet, a safer investment?
Well, it's actually quite a nice fusion between a tremendous amount of upside but a lot of downside protection.
Okay, good.
The other thing that struck me was Donald's company, Resverlogix, is either going to be a zero or a multi-billion-dollar company. There's very little in between. The markets are so large and the potential is so large that it's binary. It's a 1 or a 0. And we're fast approaching that time when we'll soon know whether he has cured a very significant disease or whether someone else is going to have to do it many years later. On the other hand, David's company, Stem Cell Therapeutics, is not actively in clinical development with multiple programs. Right. Instead, he has a tremendous organization of experts that takes corporate governance and capital raising and assessment of university science very seriously, and he will soon be bringing in multiple assets and developing them. So it's more of a receptor company and a platform for tremendous potential to develop regenerative therapies.
So Donald, what do you have to say about your zero to max capacity here?
Well, it's a little bit inaccurate. We do have the max capacity. It is an enormous market, and Brian is correct that if it hits, it is an overnight significant change. However, over the last year, we have fully elucidated our mechanism of action and moved into autoimmune and Alzheimer's as well. So we really have diversified quite a bit. So it's not a zero to max, but it is a lot riskier if the lead program, cardiovascular, does not work, and we will know that answer within a year.
Okay, well, what would you suggest? What would be your advice to our audience out there who might find your stock a bit too risky to invest in?
Well, I think over the last couple of years, the market's provided that cushion for them already because the downtick in the stock has been fairly significant.
Yes.
We're quite confident going forward, and we have 3 major clinical points being released during 2012, and that should give some pretty high significance. We have 2 ongoing trials. One of them is now fully enrolled, and the other one enrolled its first patient this week. And we're moving forward at quite a pace, and we're looking forward to the results that should show the all the indicators are there that this drug will work.
Well, the other thing that struck me about all 3 of these companies, and David can lead after my next comment, is there's about 100 public Toronto Stock Exchange listed companies that operate in the healthcare space. Maybe half of them doing drug development like these 3 gentlemen. Okay. But it is a market of haves and have-nots. 80% of them may have extraordinary science but can't show confidence to investors or properly articulate what the opportunity is. And I don't know how the executive producers did it or chose these 3 people, but these are 3 people, some of the few that are the haves in our industry. They have successfully attracted corporate investments, corporate partnerships, strategic investments from multinational firms, and of course have raised between them hundreds of millions of dollars in the public markets, which is a very hard thing to do for research stage companies that don't make money and spend a lot of it trying to create a lot of value. So I guess my only question for David would be, you've been one of the most successful people in our industry at that, and how do you see the recent environment affecting that and going forward?
Well, thank you. I think we should perhaps start this answer by really understanding the business that we're in, and I think it would help a lot of the viewers if they think about biology exactly the same way that most investors think about geology. So all we're doing, what we are really doing in our business is we are mining biology. We have exactly the same business model as the gold miners, the exploration and development companies. So our model is the same. And that is that we look for properties. In geology, you use the geology to identify the property, and you drill and you hope you find gold or oil and gas. In biology, you do the same thing. And what we are drilling up at the University of Toronto, and in fact, what we have is we have a franchise to drill across this entire nation. So instead of being confined to a particular property, we can go anywhere we wish across this country, across the world, to mine for the biology. Doing that is extraordinarily expensive. And we can spend 15 years developing a single drug before we know whether it has value or it fails to have any value. And Canada has tragically been a very difficult market in which to raise capital for the life sciences. So we understand geology, but we don't understand biology. So in the case of YM Biosciences, and the reason I was brought in to lead stem cell therapeutics, is we raised the $250 million that we raised it pretty much entirely in New York, thanks in much part to Brian Bloom's efforts, but we raised it mostly in New York and throughout the United States. The reason that Canada is so difficult for us as a landscape to raise capital is that the federal government actually penalizes investors who are prepared to risk their money in biology, in the life sciences. And that penalty comes from if an investor is faced with two investment opportunities of equal risk, one of ours and one a mining company, the investor in the mining company is actually subsidized as to 50% in flow-through shares. So it's the equivalent of having investors in biotech being penalized by the federal tax policy. So as soon as we can get that changed, then the money will flow much more aggressively and help us develop in Canada.
Very briefly, just give me an overlook of what's been most challenging.
You know, we have all of us here multi-billion-dollar opportunities. Us, one of the most common cancers in the world, and bladder cancer, and a huge public health problem with E. coli. These are massive opportunities, but then bringing these opportunities to concrete reality is the very multifaceted problem that we address as managers, and that involves sourcing the capital, that involves proving the science.
Okay.
What you know and what you can prove can be very different things on occasion, and then bringing it through on the execution, and it comes down to a lot of that in executing on these
and
ideas.
Donald, I see you nodding your head a bit there. Do you agree?
Yes, I agree with both David and with Cameron in the sense that raising money is the hardest part of shepherding a biotechnology company forward.
Yeah.
And in such, the government really should make it a lot easier. You would think they would, because in our case, cardiovascular disease is the #1 killer of both men and women in Canada, worldwide, but in Canada. It's also the most expensive. It's the #1 expense in our healthcare system.
Right.
So they should be really moving towards the type of models that David talked about for more than just industry development purposes. Their own budget reasons, they should be doing that.
We also can tend to have what I sometimes call the Celine Dion syndrome, which is until you're headlining a show in Vegas, you mustn't have any talent at home. So we do need acknowledgement of the quality of the science and the quality of the opportunities coming out of Canadian companies here in Canada.
Right.
All very
That
good
takes
key
capital.
points.
I agree.
Yeah.
I want to thank our guests for joining us today. Thank you, Brian, and thank you, gentlemen.
Thanks, Andra.
And that's our show. So you've heard what they have to say. Now the rest is up to you. To learn more about each of the companies profiled today, visit their websites or speak with your financial advisor and get all the facts before you invest. And join us next week when we'll introduce you to 3 more publicly traded companies who might just be the next biggest winner. Until then, I'm Andra Enescu. Good night.